Here are the crypto top headlines covered in this video. Here's why Ripple might appeal groundbreaking XRP court ruling. Next, VC firms are slowing down crypto investments for a nuanced reason, says venture capitalist. Also, ADA price to $2.70. Cardano breakout nears as 732% uphill screams amid strong development activity. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, here's why Ripple might appeal groundbreaking XRP court ruling. On Wednesday, a federal judge brought the long-pending Securities and Exchange Commission court battle to a close, imposing a $125 million penalty on Ripple. The penalty is much closer to Ripple's bid than the $2 billion the SEC had sought, causing the price of XRP to skyrocket over 20%. Ripple executives and other crypto spectators hailed the ruling as a key victory. Nonetheless, Matt Rosenden, the founder of the blockchain infrastructure and tokenization platform Capsign, predicted that Ripple would likely appeal the court decision. Is a Ripple appeal possible? You see, despite the financial win, Judge Annalisa Torres also imposed an injunction against Ripple, enjoining the company to refrain from violating securities laws in the future. In her decision, Torres pointed to Ripple's willingness to push the boundaries of the law after the SEC lodged its initial lawsuit, contending that there is a likelihood the company will eventually cross the line. Capsign's Matt Rosenden suggested that this injunction forces U.S. institutions to buy XRP from the market rather than at a discount directly from Ripple. In Rosenden's opinion, this would present adoption hurdles for the on-demand liquidity, or ODL, service and XRP liquidity in the U.S. markets. Notably, he still thinks that Ripple does not need to sell XRP directly to U.S. institutions to be successful. Rosenden has also noted that Ripple can sell XRP tokens to institutions, but it will need a federal securities exemption. Such sales are exempt from SEC registration provisions, he posited, adding, "The only practical exemption Ripple can claim is Regulation A, but that limits XRP sales for ODL to $75 million per year, which is not ideal at all." Although the case has reached its end, there is also speculation that the SEC could appeal Torres's historic ruling from July 2023, potentially extending the legal proceedings. Last year, Ripple notched a partial victory in its legal brawl against the SEC after she found that Ripple's institutional sales of the XRP token, and not sales to retail investors via exchanges, qualified as unregistered securities offerings. The top Wall Street regulator initially sued Ripple for violating securities law in late 2020, leading to the XRP price crash and forcing several crypto exchanges and major partners to cut ties with the company and its coin. XRP ETF is the solution. Matt Rosenden believes the only solution to Ripple's institutional sales conundrum is an XRP exchange-traded fund. He proposed an XRP ETF that Ripple can sell over the counter with institutions on the XRP ledger, or XRPL. However, the pundit notes that Ripple would be required to have an ATS license to carry out those secondary sales. Overall, with the legal uncertainty regarding XRP's retail sales now resolved, there is growing excitement about XRP getting a spot ETF on Wall Street. Such a product would give institutional investors exposure to XRP without holding the asset directly. Ripple CEO Brad Garlinghouse claimed earlier this year that an XRP ETF was inevitable and that it was only a matter of time before the Securities and Exchange Commission green-lighted many other crypto assets for similar fund offerings. A potential XRP ETF would open new investment avenues and significantly boost the visibility and presence of the market's seventh largest crypto in the financial sector. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, VC firms are slowing down crypto investments for a nuanced reason, says venture capitalist. Adam Cochran highlighted that crypto funding has slowed as venture capitalists prefer to focus on breakout trends rather than moonshots. The cryptocurrency industry is rare in that the strong returns from Bitcoin and Ether allow investors to avoid the early-stage risks they must take in other industries, according to a venture capitalist, or VC. VCs have slowed investing in crypto by a lot, and it's a bit of a nuanced reason. Adam Cochran, partner at venture capital firm Cinnamhain Ventures, wrote in a thread of X posts on August 9th. Cochran explained that most venture capital firms have limited partners, or LPs, who are primarily interested in outperforming index funds. He added that, in the medium term, the risk-reward ratio of owning Bitcoin and Ether will easily beat index funds. Over the past 10 years, Bitcoin has had an average annualized return of 60%, while the S&P 500 index has averaged a 13.2% return, according to Curve.eu data. VC firms have time to avoid riskier bets in crypto industry. This allows venture capitalists to stay on the sidelines with Bitcoin and Ether rather than take as many early-stage risks with Web3 startups as they do in other industries, according to Cochran. Normally, in an industry, you've got more VCs taking early shots because the idle gain that BTC to ETH provides doesn't exist in those markets, Cochran explained. He pointed out that during the last crypto cycle, 2020 to 2024, VC firms seemed active by investing in applications that had already broken out as they were hoping to make up the multiple on late stages with consumers. We've also burnt out the last few narrative trends: NFTs, AMM forks, DeFi, L2s, and it's not quite clear what's next, he claimed. While every VC firm brands themselves as pro-innovation and in the trenches with the builders, most of them don't actually pursue moonshots, they just throw capital at breakout trends. Crypto venture capital funding has exceeded $1 billion in 3 separate months in 2024. March, $1.09 billion, April, $1.04 billion, and July, $1.01 billion, according to Root data. This is a significant increase compared to 2023, when it only reached that level once in November, $1.29 billion. However, it's still significantly lower than 2 years ago, when the first 4 months of 2022 each saw over $4 billion in crypto venture capital funding per month. Most crypto VCs are just tech VCs that call themselves crypto VCs because they can raise more money that way, but they don't get the nuances and frankly don't add enough value to get in early on things, Beanie claimed on August 9th. Our next top headline, ADA priced to $2.70, Cardano breakout nears as 732% uphill screams amid strong development activity. As Cardano, or ADA, continues to dominate the development activity scene, the 10th largest cryptocurrency based on market value might be gearing up for a major boost. Taking on X, formerly Twitter, market analyst Javon Marks acknowledged that ADA was eyeing a breakout that would make the altcoin skyrocket to $2.77 in the long term. Marks stated, as ADA continues to hold breakout, sites remain on a massive bull run to come in, which can lead all the way up to $5 plus. From the holding breakout, these prices can be poised for an over 732% uphill run to first $2.77, and based on the previous breakout, and run higher can be possible. The analyst added that if the breakout occurs and Cardano surpasses 3 resistance walls, ADA would see a 1,400 to 2,200% upside toward the $7.82 level. Another chartist who goes by the pseudonym Bitcoin ATM, shared similar sentiments that Cardano's major upswing was on the horizon and could happen before next year. ADA was hovering around the 0.3427 cent zone at the time of writing, according to CoinGecko. Cardano's development activity shines. Cardano is among the leading cryptocurrencies in terms of development activity, according to sentiment data. Coming third after Internet Computer, or ICP, and Hedera, or HBAR, ADA's development activity is helping solidify the altcoin's potential project growth and user adoption, with the Chain upgrade being a stone's throw away. Set to go live this August, the Chain upgrade is meant to spur Cardano's decentralization quest thanks to the integration of CIP-1694 into the network's governance mechanism. With node reporting and blocks protocol at 70% and 60% respectively, Cardano's Chain hard fork is imminent. This development and various bullish signs paint a positive ADA picture. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.